Hey guys. Let me make sure you guys are seeing me. Hi, good morning, everybody. Somebody give me a sound check. Let me know if you hear me okay and if the visuals are okay. Hey guys, everything is good? We can't see me. You can't see me. Okay, hang on. What's going on over here? Why can't you see me? I see myself. Um Share. Okay. How about now? Are you guys seeing me now? Should be able to see me on the screen. No, you guys tell me no? No, again, you don't see me? Do you guys see the screen? Wow, what's going on over here? I see myself. There I see. Okay, everybody sees me now. Okay. All right, very cool. All right. Okay. All right, you know what we're gonna do? I think I know what the issue is. So we're gonna have to, I'm gonna trade from a different chart. I'm just going to move stuff around from a different chart and just go through it because I guess for some reason, I'm just watching myself here. All right, hang on. Let me just try one thing here. I'm going to change. You guys seeing the chart like a different chart? This is the YM chart. You guys seeing the YM chart? Just all white. Just give me a yes. Just say yes. I want to make sure. Okay. All right. Cool. All right. So I think we can. I think I can trade from this chart, and and you guys will see me. I think everything is all good now. All right. Good morning, everybody. Good morning. Very excited. We have a great day today. We're gonna, obviously, gold is the star of the day today, but we'll be trading everything else, especially as the market goes to the open after 9:30. So the most important thing I kind of wanted to share with you guys is we talked about this in my room yesterday, and I really wanted to emphasize this today. Last week we had a horrible Tuesday, just a horrible Tuesday. Got decimated. I took like a $500 drawdown. I was $1,500 away from my starting point. Right today, as I speak to you, I'm right back. I made all of it back, and I made all of it back by literally focusing, not 100%. The first one to admit that I did not trade 100% properly, but I traded enough properly that I was able to get, I would say, maybe 80 to 90% properly to get all of it back and then some since then. Happy to show you my P&L. I think we have to go to, I have to stay on this trade of 8. Yeah, I'll show you my P&L just to I wonder if you guys can be able to see all of this. Hopefully, yes. We'll see. Yeah, you guys, I see myself in the thing. It's switching around. All right, give me a second. We just have to pull up the trade of 8. So I'm going to pull up the report from about a week ago. Right? Let's say custom range from, this is like last Tuesday. Let's go, because that was like a really ugly today to last Tuesday. Let's see if I can go. Here's the report, and you see I made back $1,100 trading nothing more than just one contract most of the time. Right, 67.8% accurate. You can see the numbers. standard deviation. Largest winning trade was 210, 225. Actually sort of like very, very, even. And I think if you go to Wednesday, so Tuesday was a horrible day, right? If we go to Wednesday, which is when I started to improve, here's what you see. This is the improvement. You see me going to $1,500, right? From then, and you see me making 75% of my trades. Everybody can see this on my analytics in my TradeOvate account. So I just wanted to show this to you so you guys can believe me that what I'm about to show you, I think really, really works well, and really was the reason for my success of going very, very deep in the drawdown to now essentially this is the P&L history of the last week. You can see, so this is basically me last Tuesday, and this is me since last Tuesday, just coming up and performing much better. So what did I do that was different? And this is really what I want to talk to you about. Now I'm going to go back to my chart and let's see if we can get that. Okay, cool. All right, everything is all good. Okay, so I'm still sticking on gold here. By the way, while I'm talking, while we're talking, and we have gold up here, I'm going to start trading if I get the setups, and I actually am getting a setup right now. The setup that I'm getting right now is the setup that I do all the time, which is we're trading with the trend. So in this particular case, it's the 8-period SMA. Although this setup may not have to wait. Nope, the setup just disappeared, which is fine. So the setup that we use is if the price crosses the 8 SMA, this is the long side, at a higher point than the prior. So this is the prior cross, this is the current cross, right? And you create a higher low on the candle. So the candle has to have a higher low. In this case, you see it was a matching low or a lower low, then it's not a trade. But in this particular case, you can see that this crossed the 8-period SMA, right? Higher low over here, and I got long. It was a pretty easy trade to make. I'll show you the much more cleaner setups in all this. And by the way, this goes the other way around, where if it breaks from a lower point, so this is an 8-period SMA over here. Now it breaks it from a much lower point. It broke it over here. Now it broke it over here. Lower high over here. If you had shorted this, you would have made money. I did this on the Nasdaq at this time of the day, so I'll show you I actually can show you my Nasdaq trade. This was the classic Nasdaq trade. This was Waller talking, but I didn't really trade the news. I traded the price action. So you can see here's the 8-period simple moving average, nothing more complicated. The price is much, much lower. If you go backwards over here, the last time it crossed it was much higher. So we're in a negative bias trade. Now, what I'm looking for is a lower high. I get a lower high over here. Boom. Thank you very much. That trade is done. So at that time I was watching Nasdaq, so I wasn't watching gold, and I took that trade to the downside. Meantime, I'm watching gold now, and if I get a higher low, I will take that setup. That's literally all I do all day long. I scalp based upon the bias and the positioning of the candle. I scalp with a 1-to-2 risk-reward ratio. So that means I risk 2 to make 1, which is why that 75% accuracy rating is very, very important. You need a 75% accuracy rating in order to be able to have a winning strategy. That's a 66% break-even strategy, and I'm at 74.5 on the win side. So obviously that makes it really, really valuable as a spread. And I forgot already how many trades I had, but you saw I had at least like 40 trades, 30, 40 trades, maybe even more so in that account, and probably more so. So it's definitely a very clean statistical sample that kind of legitimizes the position. Now we're 18 seconds to the close of the candle, and we're in gold, and we have a higher low right over here. You can see the higher low just by and then right there, right? So now I'm going to go, oops, fuck. Of course, I'm talking. I'm not paying attention. Damn it. All right, I'm a little bit late on this, but I went in we're targeting 7 ticks with a 15 tick stop on this particular trade. Okay. So that means I'm looking for 33.4 on my trade. Here's my trade over here on the DOM. So we'll see, we'll see how it trades. And then, it may work, it may not work. And this is the most important realization that I sort of made. I talked about this in my room yesterday. And this is something that I really want to share with you for those of you who are day trading or trying to pass the prop or just trying to run your own accounts or just trying to learn a lot about day trading. The mantra that I live and die by these days is that there's no winning or losing trades. There are no winning or losing trades. There are only correct trades and incorrect trades. Correct trades are ones that satisfy the conditions of your setup and then satisfy the execution of your setup. Now, this trade, I misexecuted it just a little bit, but not so much that, that it's going to make a difference. It's either going to work or not work. And incorrect trades are any trades that are not part of your setup, right? So that's the bottom line. If you come with that kind of mindset, you really couldn't give a flying F whether the trade does well or not. What you really care about is whether the trade is correct or not, because the more correct trades you make, the more profitable you become. It's just as simple as that. Once you stop focusing on winning and losing and start trying to make correct trades, that's what you should be working on. Now, this trade, will it work? Does it work? I don't know. It's a correct trade. It's a correct trade in the sense that it crossed the moving average at a higher level, which means that that there is an impetus for gold to go higher. There's buyers on the tape. It created a higher low, which again confirms the idea that there's buyers on the tape. Now it's a question of whether we get the flow. Do we get the flow towards our target? We'll see. It's playing around. We got, what time is it now? 24. We got 5 minutes before the U.S. Open. That's always going to be problematic. Always, trading before the U.S. Open, you're always going to get lots of vol over here. And generally, my new rule of thumb is, even if I get a setup, especially in the equity side, I try to stay away from. I want to give myself the first 5 minutes of the U.S. Open to kind of let it, let the vol play itself out. But as you can see, we're hoping that this thing can push, but we're close. And there you go. Correct trade, executed properly. Boom, boom, boom. First trade of the day, right? That's all you want to do. You just want to focus on doing a correct trade, right? Anybody have any questions? I now got to go look at gold is bearish after day. So Kavinka is telling me that gold is bearish after day. You're absolutely right. All of you guys in your analysis are absolutely right. The thing that I'm trying to explain to you is that when we're scalping, which is the shortest time frame, and I'm sorry, I didn't get a chance to, we'll do a little bit of trading, and then I'll go back to my account and I'll show you the analytics, the report analytics of what makes a scalp trade, what makes a winning scalp trade in terms of time. You'll see some really interesting stuff. But I can only share one. I don't want to get off of trading. So you're absolutely right that gold may be bearish intraday, so on and so forth. We don't care because we're trading the microstructure. We're trading the last 10 minutes, right? Those of you who may be more advanced statistically may be familiar with something called the Markov chain. The Markov chain statistically is what Jim Simmons from Renaissance Technology used essentially as the foundation for a lot of his quantitative trading. And it sounds very complicated. It sounds really, intimidating. But the reality of the Markov chain basically says, listen, I have no idea what past data is, how past data is going to impact my future data. I have no idea what the future forecast is. All I know is that the immediate past gives me an edge in informing me on the immediate future, right? It's the simplest way to think about this is if a minute ago, like right now, it's beautiful and sunny in New York City. And if you were to ask me to forecast the weather 1 minute forward, I would have 99.9 degree confidence that it would be sunny and pleasant 1 minute forward. Now, ask me to forecast the data an hour forward, maybe I'll be 95% confidence. Ask it to me to forecast it 5 hours forward, maybe I'll be like, 80% confident. Ask it for me to forecast it 2 days forward, and my confidence drops below 50%. Ask it to me to forecast it a week forward, and I have zero fucking clue, right? So that's a kind of a definition, a colloquial definition of a Markov chain, where if you know the prior conditions immediately and you understand the immediate constraints, and the immediate constraints, for example, in the weather situation, is that it's very unlikely that the weather is going to radically shift within a minute time frame, but within an hour time frame, within a day time frame, it certainly could. Another good example of like a colloquial example of a Markov chain is those of you who play baseball. So forgive me for all the non-Americans. You can translate into cricket, but in baseball, if a batter is at a plate and the count on the batter is 3-2, that means that he's got 3 balls, 2 strikes. There are really only 2 or 3 possible outcomes that come out of that particular event. He's either going to strike out, he's going to foul out, or he's going to hit the ball, right? So there's only 3 possibilities. Whereas if the count was 0-0, there are, far greater possibilities of all the situations that could happen. And so that's essentially how you look at trading. Given the fact that I had this very short move towards the moving average, given the fact that I had a higher low and an impetus to go higher, was it more likely that the buyers were going to be dominant or the sellers going to be dominant? So I made the bet that it was more likely the buyers were going to be dominant. That was my scalp. And I basically, clearly I do this 4 or 5 times an hour sometimes, if the conditions are right. And literally the foundational concept, behind that setup. And that's really, that's really how it works. I'm just scanning through the equities pieces. We don't have anything on the equity side right now. Everything is, there were opportunities here to the downside, but they were right after Waller talked, because he was clearly hawkish. And that hawkishness is translating into some negative flow in equity, especially most negative in NASDAQ. But remember, we have NVIDIA coming up today. That could be the salvation. Everybody's looking at that as the great salvation for NASDAQ. We'll see how NVIDIA does. For right now, what we know from just our analytics is we have a negative slope on the moving average, right? Negative slope. If price pops above the moving average, and I'm going to just kind of walk you through the process of how I think. If the price pops above the moving average and climbs to this level over here, then I got no trade. Like, it just climbs higher. If, however, maybe it climbs over here and then creates a lower high, it kind of fails to make a fresh high, that will be a short opportunity for me. It's the exact flip. It's the mirror image of the long opportunity, because I have a negative bias on the slope and I have a shorter scalp. And this allows me to, to make the trade to the downside. So Kathy is reminding everybody, while I kind of run you through the mechanics of the trading, that our friends at Apex are running this ridiculously massive sale. I wonder if I could actually, hang on a second. Copy image. Can you move this over here? Oh, you guys, I wonder if you can see this. Huge sale. I mean, so ridiculous. It's beyond belief. I wonder if that comes up. Yeah, there it is. It's coming up on the chart. So it's actually 90%. I'm wrong. I thought it was 80%, but it's 90%. But here's the thing that you guys may really, really find interesting. This is absurd. They are just insane for doing this, but their insanity is your advantage. I'm trading a $250,000 account, right? That account normally is like $1.67. No, it's more than $1.67. I think it's like $300 normally. But what they did is they actually selling this $250,000 account for the same price as, oh yeah, 517. It's $517. That's what it is. I knew it was crazy. They're selling it for $16, which means if you trade this account and you succeed in trading, just using techniques that I'm using, you're funded for $250,000 for the whopping price of 16. Now, what's really, really cool about this is that you can buy 10 of them if you wanted to, and just, hold them and then trade each account differently, trade one account with larger size, maybe. They're very flexible. They allow you to do a whole bunch of different things. But like, this is insane. I don't know what possessed them to do this. I think they had so much interest that they just decided, okay, we'll go crazy. Anyways, BK, the code is BK Save. This 250 account is just it's just an insane deal, as I said. If you want to take advantage of it, great. If you want to take the $50 account, which is, or the $50,000 account, which is what I like to do that as kind of my anchor account. I find that to be a great, great trading range. You can do that as well, regardless of how you do it. These are all great deals, and they're really, really fun to have. So I will. I'll put this over here in like a tiny little note here so everybody can see. In the meantime, we'll look at the at what's going on here. So while I'm yapping, here's what's going on. We have NASDAQ. I have sells. And what I'm looking for is this 14, 13, 14 seconds, right? And no, so look at that. This is the beauty. This is the beauty of my system. There is no signs of weakness. There's actually quite a lot of signs of strength. We're taking out the highs. Until I see signs of weakness, there's zero reason for me to want to short. Like, in the olden days, I would just go, oh, they're selling it down. It's a retrace trade. Let me short it, right? And it was always a mistake because I'd be early. I'd short over here. I'd get squeezed out, and then eventually it would collapse, right? Or sometimes it wouldn't even collapse. But the point is, I was always early because I didn't have this structure, this methodology of making sure that the sellers had dominance. Right now, the buyers have dominance. As a matter of fact, if the buyers cross the 15 level right over here, the whole setup is going to disappear, because what that means is that we have so much buying power that we were able to push it above the prior wave, the big prior wave over here. So there's not much of a, it may still work, but it's just not much of an upside to the setup. Okay. So people are asking me a couple of questions while we're watching this. Let me just cycle through indices. Indices don't have anything. Indices. So there's I'm looking at the S&P, which is also creating this negative setup. It's an equal sign, not a lower sign. It's not a perfect setup, but it could be a sell setup. We'll get ourselves ready. Let's see if I really want to do this. There's a couple of things about this particular candle I really, really don't like. It's a huge candle. It's 28 to 25. It's 3-point candle, which is a lot of movement in the S&P. All right, now maybe I'll short it because it retraced back up. Maybe I'll give it a shot. So in this particular case, this, again, not a perfect setup. As I said, we want to do correct trades. This is a kind of a correct trade. And it's probably going to go against me. Yeah. Because what I wanted to see was, you want to see a true weakness on a lower low. No, I just retrace at me. It's fine. It's a tiny little loss. It wasn't a perfect trade, but I took it just because I wanted to give you guys an idea of the trade. Now, however, we may have to now I want to kind of look at this carefully because I got 21 seconds left. This candle is clearly, well, let's just see before I start speaking. Clearly has a lower high. Clearly a lower high. Let's see if I get a chance here to make a secondary entrance. All right, short here. Give it one more shot. Now this is a correct trade. If it works, great. If it doesn't work, that's fine. But that is a correct trade. And we're almost there. Come on, come on, come on. And we're done. And that's done. And we're done. So one was a incorrect trade that I kind of forced. The other one was a correct trade that I did. It's actually good for you guys to see me screw up, because you see when I call things correctly and when I call things incorrectly, what happens. But it's also 7 minutes after the open, still a lot of volatility in the market, still a lot of nonsense going on here. In the meantime, the NASDAQ trade is a little problematic. So there's two things here that make me hesitate to take a short here, right? One is that this was a really, really big move up here. It actually almost came to the 15 level. And I said, if it goes to 15 level, it kind of invalidates, right? Two, you got the green candles over here, right? A lot of green candles here. That having been said, it's probably a pretty, it's not a horrendous trade to take. But what I do, and this is a great trick for those of you who are trading, large accounts, if you want to give it a try, but just completely are uncertain about it, if you want to just give it a BS try, do the micro contract, right? So now, if it works, great. It gets me back in the zone. I hit my backhand properly, more or less. If it doesn't work, it's completely immaterial, and it does work. So, this was a good setup. One of the important things that I like to do with you guys when we're trading live is to do as many trades as possible. Unlike other gurus on YouTube who like talk a lot and spend 5 hours playing music for you, I feel the function of 1 hour with me is to actually show you real live trades going off in the marketplace, not bullshit about theory and then take one trade for 3 points and declare yourself a winner, right? I want you to see my process. Now, however, sometimes the process is not perfect, so I may just substitute the little contract for the big contract, because I don't want to impact my P&L, but I want to show you the process, because it's not about what all of these live trading sessions are all about is for you to learn the process. I'm basically here to teach you how to hit a backhand. Once you learn how to hit a backhand, you'll hit a backhand for the rest of your life, and you start hitting passing shots like Roger Federer. And once you can do that, it's an amazing thing to be able to scalp for the rest of your life, to be able to take any market and make money out of it on any given day, because you have the skills to read the charts and read the price action, is a super really fun skill. Even if it's not your primary skill, it's just great. It's like being good at golf. It's like being good at tennis. It's like being good at anything, except you get to you get paid a little bit for doing it. So my whole point, and I hope you guys appreciate this, is take trades. I'm going to try and take trades. Now, as I said, I'm not going to take stupid ass trades. I'm trying to trade correct trades. But sometimes if I don't have quite the confidence or quite the setup, I may take the small trade. But it doesn't matter, because the whole point is, as I said, to run you through the process, so you guys see the process, see how it's going. What else is going on over here? Nothing. Gold is. We took our gold over here. Now this is actually would have been an interesting trade. I was distracted with the S&P, but this is a kind of an interesting analysis of this chart. Let me see if there's any questions before I. There's any questions on my process? Any questions on the setup? Does everybody give me a couple of yeses in the room that you guys are starting to understand what I'm doing, how I'm watching the chart? So what I want to talk to you about now, which is kind of interesting, right, is I'm watching the chart here. So sometimes the charts are super clear. You're coming down from a high. This is a low, super clear trade. Sometimes you kind of caught in between the highs and the lows, right? If you're looking at this particular chart over here, what you see here is the prices made highs, then they dipped below the 8-paired moving average, right? And they kind of made a move higher, right? They made a move higher. For right now, as you're looking at this is still mildly positive bullish bias. So what I'm looking for over here, in terms of to kind of confirm to me that I should be looking for the long trade, is that as long as prices don't break this low, this is the most immediate low below the 8-period moving average. As long as I don't dip below that low, Just like, remember, I was saying, as long as I don't rise above the 15 on the Nasdaq, I want to be short. As long as I don't dip below this low, I should be looking for a long candle. Now, a long candle is one that's going to have this particular. Let me just do one more thing. It should have. So what we're looking for is, this is a dip, dip lower. This is a higher dip. This dip is a higher dip. So presumably we should really be looking for a potentially, buy trade in gold here. Now it's kind of dying out. You can see there's a lot of resistance over here. It's not a super clean setup. And now as this low is starting to inch lower, really gives me very little confidence that I want to be around it. But this is still a pretty legitimate setup. Like, it's not an illegitimate setup. I'm not taking this setup, but I'm just telling you that it's not an illegitimate setup. But there's a lot of things that made me hesitate, and I just kind of decided, to pull back. Now you can see the prices are kind of matching the lows. That's already giving you lots and lots of reason to not want to commit to this play. And the thing about this that you will see, and again, this becomes a little bit of art as it is science. You will see that the first or the second waves, the first waves or the second waves through the 8-period moving average on a big power move are really strong. But then once it kind of hits resistance, those third or fourth waves become weaker and weaker, and that's when you don't want to commit. Even though the setup may be there, you don't really want to commit to that setup, because it's not 100% clean. It's already tired, right? The setup on the long side right now is tired. As a matter of fact, what's really happening now, and as we analyze this, if we get everything, is the price action in gold is actually turning bearish. And who is it? Kavika is telling me that that everything is kind of turning bearish. And now on the 1-minute chart, this may actually actualize itself, because what's going to happen is, if we get to a situation like this, I'm going to flip this around. If we get a situation like this, we can just imagine over here, the price rises above the 8-period moving average, and then starts printing lower highs, right? A nice clean lower highs. Then we have a clean definitive short, because it's going to fail at lower levels, right? If, on the other hand, it just does a V shape and comes back up, again, it invalidates the setup. But this is now we sort of see where the price action is going in the near term, and we can position ourselves to what potentially could be a setup, 4, 5, 10 minutes ahead of time, if that's the story. That's basically how I'm thinking about all of this right now. In the meantime, equities are looking a little bit better. So equities on the equity side. So this gets interesting. We crossed the 8-period moving average from this level, right? Now we're dipping over here. Now this is where it gets interesting. If we dip below over here, it's 40, let's say 41 seconds. Let's say this candle closes below, right? Now, if it closes below and it doesn't really drop much, below over here, it kind of consolidates. I absolutely want to go long here. I absolutely want to have a positive bias. I have a higher low variance, right? Just kind of watching this. This isn't even dipping below the freaking 8-period moving average yet. It's not even giving me that opportunity. 10 seconds left. So this is not a candle that we're going to trigger on. This is just a candle from which we're going to anchor ourselves. Okay, 1. So now what we're looking for is a higher low. We don't get it. Now it's matching. So now this candle is invalidated. Really don't have. Now, now we definitely don't get it, because now it's a lower low, right? And now we get a little bit of a correction. So what we're looking for, and you guys, I think we'll start to begin to understand, is as long as prices are going up, there is a sell-off. And as long as the sell-off is not too severe, there's probably going to be a second buyback. And what I am basically trading is that second buyback. Just like on the short side, I'm trading the second sell-off, right? I'm trading that second buyback. As long as I don't get a puke job all the way down here to the bottom. I'm looking to see if there's any news on the trade. I'll be happy to to take this. But this is getting a little significantly deep in the zone. So 5, 6 seconds left. This candle stops. Now we have to watch the next candle and see if the next candle can hold the lows. Can the next candle kind of hold the lows, trade around here? Now, the Achilles heel of any of this stuff is sometimes, because you have to be patient and you want to make sure that the candle closes and it holds the lows. Sometimes this candle can be like 3 points. Basically, all your profit is in your trigger candle. And if all your profit is in trigger candle, you kind of wind up chasing it. You put yourself in a bad entry. Even though it's a correct trade, the length of that candle is just so large that you put yourself at a disadvantage. That happens. I tend to still go for it because I feel a lot of times there's still enough continuation for us to make the trade. 8-9 seconds left, but this is a big candle. We went up $2.50. Remember, all we're looking for is 3/4 of a point, and this thing is just soaring. Okay, so I'm long here, and we'll see. We'll see if I get caught in the retrace. And this is one of those examples where you can be correct and wrong at the same time. So it means you're generally right in the direction, but the volatility may take you out. So we'll see. We'll see if I can survive volatility. It doesn't look like I can survive volatility, but I warned you about this, and I want you to see this this in action because this happens. You need to be mindful of all the parts of this setup, which is that when you have the fact that you have this massive volatility candle. This candle is usually 2 or 3 times the size of a normal candle, right? The natural retrace could take you out, even if you ultimately directionally right. If ultimately, directionally, maybe the prices go up. So we'll see where we stand. We're sitting. I am exited 28.25 on this trade. We'll see if the buyers can come in. Right now, it's just we're sitting underneath here, relatively quiet. I have not tested the linear weighted moving average. If you would like to post the settings of that, be happy to use it. But I am a great believer in keeping things as simple as possible. It's not the 8-period moving average, it's not the 9-period moving average, it's not the 10-period average. It's just a short. It's basically a Maginot line against which you can trade the move. All right, never mind. I'm really going to be very, very good. Usually I pull the trigger early on a lot of these things, but I'm going to try to show you my best habits, win, lose, or die, just because the whole point of our live trading sessions here is for me to behave myself. And not to show my worst. It's to show you the full setup. So we're going to stay patient and see if we can get swept at 28.25 on this trade, and see if they want to take the 28s. There's 92 now at 28s, 102, 87 taken, and there we go, and we're done. And we managed to survive the volatility. Took the trade. I stayed patient, which is literally. I deserve a medal for this because if anybody knows me who trades live with me knows I have zero patience. And we banked yet another trade. So I already stopped counting how many winners we've had today, but they've been pretty good. Where am I on the thing? Where is my thing? Oh, hang on. Yeah, I'm up about a little bit more than $100 with you guys. Oh, how did I get rid of this thing? Oh man, it's so annoying. This, what happened? Oh, this. Okay, sorry. For some reason my whenever I go into my accounting, let me see if I can do it this way. Oh, I can do it this way. Sorry. Yeah, now you can just watch my profit like this. Anyways, I was around 900 when I started with you guys, so 124, not bad. And remember, I took a bad trade. I took like one of those. I took an incorrect trade, which cost me. Remember, it's a 1-2 lost, so that cost me. But but I'm still. If we're counting just the units, it's in this particular case, it's 2-1. So we're flat on NASDAQ. What do we do on this? It's what do we buy? We bought this, right? So this, it's, let's say 2 on gold. I'm just going to count. So plus 2 on gold. So plus 4 minus 1. Did I do anything else? And I didn't trade NASDAQ. No, not with you guys. Okay. No. Oh, sorry. So, while we were talking, here come the fire guys. Let's analyze NASDAQ. And, again, I'm just going to put this up here for you guys to watch, but let me analyze NASDAQ here. This, a trade that I would have taken had I been watching NASDAQ. So we have a big downside move, and the price crosses the 8-period moving average over here at this. Let me just show it over here. This is the 8-period moving average, right? Then we cross it at a higher moving average, right? At a higher moving average. So that means we now want to be buyers. We want to be buyers. Now, what you see is prices go lower, and this is the first candle where we have a higher low, right? Everybody sees that? This is a higher low. So that means I'm long this candle at 95, right? And this is where I would have actually gotten stopped out. It's interesting for me to show you because the volatility on this thing, because I'm trading it with a 5-10 stop. This is why, by the way, trading NASDAQ is the most problematic of all of them. NASDAQ is by far the hardest. That's why I like trade the S&P on futures. So because I'm trading with 5-10 and NASDAQ can slip against me, it slips at 10 over here. And the second trade, which is the higher low, actually works. So I would have been 1-for-1 on NASDAQ here on the short side because NASDAQ, clipped me out. Whereas you saw me on S&P, and I was able to survive the S&P move because the volatility in S&P is lower. It's kind of like the same. Let me get rid of this, guys. You don't need to see this, right? Let's delete this. Everybody's got the discounts. It's kind of like why I like to trade the Dow versus NASDAQ also, for that reason. Just lower volatility signature. If you look at the Dow, comes up on the 8-period moving average over here, then it breaks it at a higher level, right? At a higher level. Higher low right over here. You're coming in over here at 49. Your target is 59. You've more than made it, right? Great. Then it breaks it at a higher level over here. You buy the 56. You have a 20 stop. You have a 10 target. Easy. You've done it, right? Now it's actually a lower high, so you don't take this trade. And now we actually have, so this is interesting. We have the Dow setting up. So what we want to see on the Dow here is if it can take the slope of the 8 SMA is positive. It broke to a higher level. So now I want to be positive bias. Let me go over here and put myself into the Dow mode. 10 points target, 20 points stop. And unfortunately, I think this is a matching low. Low is 48 and low is 48. So these are matching lows, not a 100% correct trade. It's kind of like a 50% correct trade. So what is it worth it for me to take it? Maybe I'll take it. 6. I'm waiting for the candle to kind of close. Oh, now it's really running away from me. All right, we'll take it out just for fun, for shits and giggles. Not a perfect trade, but the candle had some good movement on it. But now, of course, I bought it high, had a big move, and it was a matching trade. So we'll see if I can get out. My target is 73. Not the perfect execution, but I just want to repeat the setup as many times with you as possible, so you guys get really good idea of basically how to hit a proper backhand. To use my tennis analogy. Yeah, so Victor, send me the settings on the weighted moving average. I'm happy to look at it. But as I said, I don't need complexity. It's not about the moving average. It's about the candle structure. It's about the price structure. This is really what it's all about. This is where the art of the trade is, right? The moving average is just the crossover line to anchor you properly, right? To put you in the right condition. This looks like it's kind of dying out on me and not doing much. You know what I'm going to do? So one of the other things is like, if it's not moving your way, I'll take it out early. I'm happy to just take a small clip on this, because it's unnecessary. It's unneeded, right? I don't need to prove myself right. I already knew that it wasn't correct trade. I was hoping it would go higher. It doesn't. It made a lower low over here. You see this lower low? If it runs now, great. Let it go. I'm more than happy to let those profits go. But it wasn't. I'm focusing on making correct trades only, because that is what pays you in the end. It's not about the individual trade. It's about making the correct trades, right? So in the meantime, while we're talking, we missed the opportunity in gold, because gold would have been a good trade right over here at 30.1. So this actually brings me to the final point I want to talk to you guys about, which is this works best if you're focused on one single product, right? Now, I'm obviously trying to make as many trades as possible. I'm trying to keep the thing lively. I'm having you watch, guys. Lots of people are trading different instruments, so I want to be mindful of all the different instruments. I want to put a setup trader on almost every instrument I have, just so that you guys get a vibe of how it works on all these instruments. But if you're doing this at home, the single best way to do something is to just focus on one market. And of course, the gold market, in my opinion, is just the best one for this kind of setup. You do 1 hour or 2 hours, you should be able to find between 3 to 5 setups per hour, proper setups, proper correct setups. Do that for an hour, hour and a half every day. You're going to get into an amazing rhythm. If you're just trading one contract, and I'm trading tiny, I'm trading one contract. This account can absorb probably 5 contracts easily on a click. But I'm just trading one contract just to get all the mechanics correctly. And you're doing this, 5 to 7 times. And you're generally, what I try to be is 5 to 1, right? So just for argument's sake, let's do gold. Gold is $1.50 on the loss, 70 on the win. So 5 to 1 is 350 minus 150. It's a net 200 in about an hour, right? You do this for 2 hours, it's a plus 400 on one contract. If you do it on 5 contracts, it becomes plus 2,000. But that's how you get from 0 to 100 to 2,000 a day, by just learning how to hit the strokes properly, right? Sorry, I'm making all these analogies for golf and tennis, but I'm an old man, and this is what we play. But you get the idea. Everybody gets the idea. That's how things kind of work themselves out. So let me see if I get any contracts. Yesterday I said the video Apex enforce risk of reward 1 to 3. So why am I teaching us to risk 2 to wake 1? Yes, I think you misunderstand what they're enforcing. They're saying they don't want you to do more than 1 to 3. More than 1 to 3. We're doing 1 to 2, so we're well within their parameters. Okay, just to make it clear, they're saying they don't want you to bet 1. They don't want you to risk 3 to make 1, right? No, they're saying maximum you can do is risk 3 to make 1. We're actually saying fine. We're only risking 2 to make 1. We're well underneath their parameters. Okay, does that make sense, Colonel? Are we clear? So prices are coming down a little bit. Tech looks pretty good here. Don't have a trade in NASDAQ right now, so nothing is happening. The YM came off. I gave up my little trade here. We could look at the Dow again, but again, I have a matching bottom, so not a perfect trade. So not something I want to do. My favorite trade is the S&P. No trades here right now. So I'll open up myself up to some questions. We did a lot of trades today. I think I was 5 to 1, which is where I wanted to be. I was 5 to 1. No, I take it back. Sorry, we got to count the YM trade. So it's 5 to 2. I wanted to be at 5 to 1, but I took that YM trade. It's 5-1. So still pretty good. Oh no, I forgot. We actually had we are 6-2 because I took a little trade. Did I take one of these little trades? Yes, I did. I took the short trade. Sorry. So I'm not giving myself enough credit. I just didn't take it on size, but it's it's a legitimate trade in terms of trading. So 6-2 for the day today, which hopefully shows you if you're 1-2 risk on a 6-2 trade, you're net positive too, right? In a nice clean fashion. And generally, if we're focusing a little bit better, we could have been net positive 4. So overall, still pretty good. So any questions, guys? And remember, I mean, the last thing I was going to tell you is this is a setup. It's got a great structure. It's, it has very defined, clean entries and exits. You practice it. And the more you practice it, the more you learn how to weave and bob with it. You'll see some residue of that pattern in other setups where you may be willing to take a partial size. Like I'm just sort of looking at this, I would have certainly, if I wasn't trading with you guys, just focusing myself, I probably would have taken this trade because this is a really, really good trade. We're coming off the 8-period moving average over here. This is actually a higher low over here. Yes, it's a big extension, but if you took this trade over here, you were in at 16. You have a 10 stop and it goes to 21 and it takes you out nice and easy. So there's lots of stuff. What are the hours of the Futures Bootcamp? The Futures Bootcamp is going to be, those of you who are interested and want to learn all about the basics of the futures, all the futures products, and then all the key futures platforms, which is the TradingView, Tradovate, and NinjaTrader. The futures course starts on Thursday at 6 p.m. New York time. It's live. It will be recorded. So you can watch it on demand. You'll always have access to the recordings if you can't attend it. And it'll be 4 sessions over the next month. We're going to deconstruct once a week all these futures, and and I'll be happy to, of course, also coach you and ask you any questions. You can ask me any questions, anything else on your mind. But this will really, really give you a foundational knowledge of the futures market, and more importantly, the foundational knowledge of the trading platforms. You can't trade unless you can't drive a car unless you know how to drive. You can't trade futures unless you know how to trade futures platforms. So hopefully, I'll show you how to do all this stuff and make it easy. Save you enormous amount of time. It's still at a discount. I think Kathy's keeping it at a discount. So if you guys want to grab it, the links are in the chat, and feel free to do that. And of course, be sure to lock in the $16 $250,000 eval on Apex, because that's going to be a really, really cool thing for you guys to do. Okay, if there's any more questions. Oh, somebody said they need to learn NTA. Yeah. Ninja is going to be. We'll save the best for last, or the worst for last, depending on how you view it. Otherwise, everybody's good. I see you posting over here. Thank you, guys. We're going to do the same thing tomorrow. Going to repeat the pattern. Hopefully, do a lot more trades. But I hope you guys like the fact that we do lots of trades here. You see them, pile up, and you see them executed, because this will give you the confidence to do this in yourselves in real time. Just remember, one product. Start small. Practice your strokes. Hit the setup correctly a couple of times. You'll get the swing of it. I'll see you guys in my room, or I'll see you guys tomorrow in live. Everybody have a wonderful time. And anybody wants to come join me on the futures course, it starts this Thursday. So be sure to sign up and take lock down the Apex eval. All right. Thank you so much. Everybody have a wonderful, wonderful day. I'll see everybody later.